Welcome to Exchange Rates UK TV. It is the 8th of September 2021. Taking a look at MATIC here quickly on the hourly chart. There's an inverse head and shoulder pattern. But when you look at the daily chart, it looks a little questionable as far as, is it going to keep going up from here? I don't even know if a regression trend line works well on this logarithmic chart. We'll see. Not really. I mean, it's well off the lows from yesterday. Recovered more than, 50% of that move. It's had a 28% gain. We're really kind of sitting just where we opened yesterday, so not a whole heck of a lot of, direction here. The RSI's in between the in between the two oversold conditions in the bull market. That's 40 and 50. Composite index has moved lower, and the percent B is sitting right on top of 0.2. And because the RSI is still above 40, if the percent B does drop below 0.2, we're likely to see a pretty good resumption of the move south here. It's interesting. I mean, as we're getting closer to the end of the trade day candlestick, it looks like there's some kind of false rallies coming in. I'm not a huge fan of the price action going on right now as far as convincing me that we're going to return bullish. Just like I did on Cardano's chart, I think the level that's going to make it the easiest and least painful and least stressful to look at if you want to know, okay, am I bullish or bearish here? Is this market going to continue up or down, or is it indecisive? Look at the lagging span. That's the orange average. If the lagging span moves back above $1.51, we'll just say if it closes at 151.52, basically we're talking about price too, then we have a really good case for it to continue moving higher. Because if the lagging span stays above the candlesticks, we're still very bullish. That will also mean price returned above the Tenkan Sen and the Kijun Sen. But that is not the case right now. It looks kind of weak here. So be aware of that on MATIC. Polygon's got a lot of good things going for it fundamentally, but price action wise, it's kind of, it's kind of in a stuck zone. When you look at the volume profile, or if you just measure the amount of time we've kind of spent trading between, $1.20 and $1.80, we spent a lot of time in that range. The other thing here is that this looks a lot like a foldback pattern, and that what we're completing here looks a lot like what happened back here. So there could be some type of relief rally higher that moves up, and then we see another spike down. But I'm going to monitor the oscillators here as the most important thing. Things will look very bearish I shouldn't say very bearish, but they will be bearish if the lagging span moves below and closes below the candlesticks. That's a warning sign. We'll be very bearish if both price and the lagging span are below the cloud. That won't look very, very good. But for right now, the lagging span is above the candle. Actually, no, it's not. It's in between it. There really isn't a lot of Ichimoku support anywhere on this chart right now until it moves down to 117. And if that occurs, that'll put the lagging span below the candle. So just be aware of that. Watch this area very closely if you're trying to buy in at this level here because you've seen some short-term relief. Maybe it'll be beneficial if it rallies, but otherwise you could be in a bull trap here. So just be careful out there when you're trying to trade this or dollar cost average into it. Thank you all for watching. From all of us here at Exchange Rates UK TV, please don't forget to like, comment, and subscribe.